Hello, everyone. I'd like to talk to you today about the new DCM and why we are very well positioned for growth. Before I start, obviously, please have a look at our forward-looking statement, non-IFRS measures. Thank you. So I'm going to start here. A couple of things I want to accomplish on this call today. First, who DCM is, who we are as a company, and then why invest? Why now is the right time to invest in DCM? First, a very quick look at who DCM as a company is. We're a marketing workflow and communications business. We've been in business for 64 years, Canadian-based business. I'm going to share the clients with you in a minute. We started off as a print-first business about 64 years ago. We still do a fair bit of print today, but we're moving into more of a digital-first business, as you'll see as I progress through this presentation today. Okay, so a marketing workflow and communications business, been around for 64 years. This next slide will show you, I'll talk quickly through this, kind of who we are as a business. And if you look at that title across the top, we're very, our strategy is to move from a print-first business to a digital-first business. We're about $260 million in revenue, but 178 million of that revenue is in what we call conventional print solutions, but not just any print. It's print that is highly complex. So a lot of complexity, a lot of kind of individualized communication. Think of, kind of multiple, low volume, multiple SKU versus few SKU, multiple volume. So we play in that complex area. We like to say we love complexity. We kind of eat complexity for breakfast, right? That's where we really differentiate and offer value through to our clients. That middle bubble is what we call our tech-enabled marketing workflow. This is business that starts with technology. Through our tech stack, we deliver print on demand or marketing solutions or supply chain solutions for clients. And I'll talk a little bit about that, a little more about that in a minute. And then finally, off the far right, a very small piece of business for us today is what we call digital asset management, right? It's only 3.4 million in revenue today, but a huge opportunity for us over time. And I'm going to explain that in a little bit more detail in this deck. Okay, so our strategy is very clear, moving from a print-first business more into a digital-first business by leaning in hard on tech-enabled marketing workflow and standing up a digital asset management solution. We've got 950 associates. As I said, we're 260 million in revenue currently. Okay, moving to the next slide. Having a look at our client list, you can see we work with 70 of the 100 largest corporations in Canada and 3 of the top 5 government agencies. We work across 8 primary verticals, as we call them. About 93% of our revenue comes from 250 enterprise customers. I think another note is that there's not a single customer that is more than 7% of revenue. So we're kind of highly diversified between clients and highly diversified between verticals. But 97% of our business is of high retention. Okay, so real high retention rate. We call sticky within clients. And about 70% of our revenue is from long-term agreements, more than kind of a 2 or a 3-year agreement. So we're kind of well embedded with all of our clients. If we, I want to go a little deeper now on these 2 bubbles, our tech-enabled marketing workflow and our digital asset management services. And first, explaining this tech-enabled marketing workflow, as I said, about 32% of our revenue currently starts with technology and then flows into either a print solution, a digital solution, or some type of supply chain business process outsourcing solution. And a little bit more detail on the tech stack on this slide. We call it DCM Flex. We have over 100 active clients using our technology to help simplify that marketing workflow or that supply chain workflow. About 230,000 users using the platform annually, about 8,000 every single day logging in to help manage their workflow. We're processing over 300,000 orders a year. And the technology itself is what we call an API first architecture. So we're actually using best-in-class software solutions to kind of manage that, manage whatever the need is, whatever a client need is here. So marketing technology solutions to manage those client needs. And we can literally satisfy any need because we've created this as an API first architecture. Yes, we have our own code in here as well, because we need to connect the software solutions together to deliver against that client need. Now, recently, we have won over 70% of the RFPs that we participate in. We've got business that comes to us naturally. And of course, we do participate in RFPs. We've won over 70% of them, and all those wins have been due to technology, due to this digital capability that we've got as a company. And our top 5 recent wins, which include a couple of large financial institutions, are all due to the technology that we bring to clients. So we're very committed to continue to drive penetration of this technology with existing and with new clients, and which is exactly what this chart talks to, right? We've got a 32% penetration rate. So 32% of our business is tech enabled, and our strategy is very clear. We want to continue to drive that penetration with existing clients and new clients, up to, at minimum, 75% of our business starting with technology, okay? And we're well on the path to deliver that as we progress through to 2022 and onward, okay? So a very deliberate strategy to continue to drive that tech-enabled penetration. By the way, clients that are using our tech stack, a lot more, even though we have high loyalty, a lot more loyal, and generally a higher margin business as well, right? So we get really sticky with clients when they're using our technology. So hopefully that's clear in terms of that center bubble around tech-enabled marketing workflow and our strategy there. And finally, I just want to talk to you about the digital asset management services that we're bringing to clients. Now, first of all, a little bit about the digital asset management market. On my next slide, this is just the software market. Just the software market for digital asset management is about a $5.2 billion market. Depending on what data source you look at, it's anywhere from 5 to 6. About 21% CAGR over the last few years, and that CAGR is projected out at north of 20%. In fact, some data services say north of 30%. And the interesting thing is only 1 in 10 companies are currently using anything that resembles a digital asset management solution. So you've got a lot of companies that are still using SharePoint and Dropbox. None of those are satisfactory to manage the millions of assets that large enterprise clients have in their workflow today. Okay, so a massive growth opportunity in the industry, and you'll see in the next slide why we're well positioned to deliver against those growth opportunities. You can see the market is well positioned to where our strengths are. Big market in North America, and you can see it's highly kind of skewed towards enterprise solutions. As we say, the more complexity and the more digital files that an enterprise needs to manage, then the more the need is for a sophisticated digital asset management software solution. The other note I'd say is that $5.2 billion in size of market is just the SaaS piece, just the digital piece. There's a lot of other project management fees that are not incorporated in there, right? Large enterprises need a lot of support, a lot of practical support to implement. So that's a little bit about the market, and a little bit about why we feel we can play here very effectively. So we've got over 40 years at DCM of managing digital assets. You think of the business that we were in 64 years ago. It started with a physical asset. We converted to another physical asset in print. Those physical assets became digital 40 years ago. We had to figure out how to manage that digital environment. And we actually built those skills. Before there was probably even an acronym called DAM. We created a DAM, right? So we've been managing digital assets for 40 years. We're what we call a practitioner, and every single day we're touching literally thousands of assets on behalf of clients. So within our DCM ecosystem and our clients' ecosystem, we're managing thousands of assets every single day. And because we've got this technology capability, and we've learned, how to manage workflow with our DCM Flex platform, we think it's a natural opportunity for us to deliver this digital asset management, pure kind of SaaS solution to clients moving forward. As I said, a small piece of business for us today. We've really accelerated our pace this year, our client contacts and pace this year. And, we think that it's going to be somewhere between a $10 and a $20 million business for us in 2022. And as we get out through 2025, somewhere between a $25 and a $50 million business, right? Certainly 2022 will define, what our future is, but we're out of the gates, real strong and off to a good pace from a client connect perspective. So that's a little bit about our digital asset management business and where we're going with that. Okay. So now I want to turn the narrative over to why invest. First is, you can see from this chart, we believe that we are actually really well positioned for growth. We certainly had a lot of headwinds, given we're a marketing workflow and communications business. When retail was closed down, when a lot of financial institutions shut their branches, obviously consumer movements changed dramatically, and we service those consumer movements. So as those consumer movements return to normal, and we're starting to see that now, we will certainly have tailwinds. So headwinds will turn to tailwinds. That's first reason we're going to obviously see an improvement in revenue, and of course, we've got a great team, and we've got a lot of I'll say irons in the fire, right? A lot of opportunities that we're working to secure as we progress, as we come out of this, out of this retail shutdown or this economic shutdown, right? So, real opportunity for taking advantage of these tailwinds in the marketplace, and we will see a return to revenue. Second reason we believe it's a great time to invest in DCM is our margins are progressing quite nicely. If you look back in Q2, we had north of a 30% margin. Q1 this year, north of a 30% margin. You see the trend line from where we were back in 2019, right? If I drew a straight line, you can see it's a nice trend forward. We are relentlessly committed as a team to drive margin. You can see that in one of the slides later. I can't really talk about Q3, but I can tell you that because our Q3 results are coming out the second week of November, but I can tell you that we're really committed to continue to drive kind of north of 30% margins. Okay, so second reason, revenue, and this relentless focus on building a better business as well, not just a bigger business, but a better business with higher margins. Having a look at the next slide, which is our debt repayment as a company. So we have, over the course of the last 3 years, reduced our debt significantly. And you can see back in 2019, we had close to $80 million in debt. As we exited Q2 of 2021, we're down to $39 million. So a 50% reduction since 2019. And we continue to be relentlessly focused on paying down this debt, right? And reducing our leverage. In fact, our leverage is more than manageable at this point. And again, you'll see that commitment, and you'll see those results as we continue to progress, in through this year and out through next year. Okay. So third reason. And the fourth reason, I think this is a really important one. If you look at our multiple right now in the market, there's a big opportunity for value creation. So if you look at the far left of the slide, our current enterprise value based on revenue is 0.6 times revenue. Based on EBITDA is 3.6 times EBITDA. If you look at other public companies that do conventional printing, okay, so the printing part of our business, their average is 1.1 times revenue or 7.3 times EBITDA. So even if you valued our print business today, like for like, you can see how we significantly undertrade, right? Our story is just kind of hitting the street. We don't have, kind of full value for that at this point, right? So we're undervalued. Now, if you look at that 32% of our business that we run, which is tech enabled, you can see that for other tech-enabled service companies out there, their multiple of revenue is about 2.1, or 13.6 times EBITDA. Remember, 32% of our business starts with digital. That's much stickier, higher margin business. So, if we value that in, obviously that would further, emphasize the how undervalued we are today. And then, of course, our digital asset management solutioning business, which will be a much more significant piece of business for us over time. If you look at pure SaaS players out in the market that do digital asset management solutioning, their multiple of revenue is 9.1 and their multiple of EBITDA is 34, right? A lot of that is because of the recurring revenue model that they've got. A good example of that would be Media Valet that trades on the Toronto Stock Exchange. And you can see that, they've got, you can check those numbers. You can see they're kind of 9 to 10 times revenue. Okay, so big opportunity as we think of driving this digital first versus print first strategy and what that means from a value creation for shareholders. Okay, now I just want to quickly close on a few slides. Important to understand what our priorities are for the next few years. I talked a lot about digital innovation. From a talent standpoint, we are relentlessly focused on building commercial capabilities of our teams, of our sales teams, of our commercial teams. I mentioned the client penetration on tech-enabled services and the introduction of our digital asset management solutioning. From an M&A perspective, we will look at some highly accretive consolidation opportunities or some early stage MarTech in digital asset management, PIM, or workflow. And we think this is a big opportunity for global expansion. In fact, we've already got some active clients in the US where we are doing some cannabis labeling and some cannabis tech-enabled workflow as well. And with our digital asset management solution, as you know, digital has no borders. So what we think it's an opportunity to expand globally with some Canadian multinationals, multinationals that have, Canadian companies that have presence in a multiple number of markets. The best way for them to get scale and value from the digital assets is make sure they stand up a platform between all those markets. So we think that'll be an opportunity, a natural opportunity to help clients kind of build that scale globally. Our targets are down the bottom here. We want to be north of 5% growth on revenue. Our SG&A, which has come down quite significantly in the last year and a half. Our target is to be between 18 and 20. I mentioned that gross margin number earlier in the deck, where we said we're kind of north of 30 for a couple of quarters, up from the low 20s a year and a half or 2 years ago. And you can see our commitment to continue to manage mix and drive revenue, revenue creation or revenue management rather, 35 to 40%, and our adjusted EBITDA between 18 and 22%. Okay. So those are some of our goals that we are very committed to deliver over the next couple of years. A real quick look at our shareholder base. You can see that 54% of our float, of our 50 million shares that are out there, are held by insiders. So there's a lot, including myself, right? I'm up here in the directors and officers group. There's a lot of belief from insiders that we're going to have a very successful future here. And all those insiders continue to hold, including associates. We're about 3.7% of our employees through this ESOP program. Actually, I think we're approaching north of 4% now. We've got a lot of new participation from associates. So a big kind of insider group that holds shares in the company. And you can see our share performance across the bottom here. And I'm going to close on 2 slides. This one, the second slide here that I started with, hopefully it's clear what our strategy is. Move from a print first to more of a digital first business model. And when we do this well, and when our shareholders truly understand the value we're delivering through to clients and through to the market, our implied value based on the multiple we have today should be somewhere around $2.80 to $5 share price, right? I think we're trading about $1 today. So big opportunity for value creation among our shareholders. And then finally, Last slide, why invest? Summarize it all in this one slide. First, this growth of revenue and this margin growth, most of that obviously coming through this digital innovation. The value creation we're going to bring to clients through tech-enabled marketing workflow and digital asset management solutioning. I mentioned, we're currently undervalued, only trading at 3.6 EBITDA. We see a big re-rating opportunity as we continue to drive that digital first leadership model. And of course, I talked about debt being repaid quite significantly, and we continue to go hard on our debt repayment. That's something that we as a team are fully committed to. So that completes the story today. Thanks for listening. And if you've got any questions, please, reach out to myself or James Lorimer, our CFO. Happy to answer any questions that you may have, and look forward to hopefully having you as investors in DCM. Thank you.